Good morning and welcome to this session of the live coaching classes organized by the Board of Studies of the Institute of Chartered Accountants of India. Today, we are going to start an entirely new topic, possibly a very important topic, possibly a topic that lies or that is at the core of company law. But for this topic, there is no real big charm in forming a company. So it could as well be a partnership or even a sole proprietary. So why do people form companies? Of course, because of the separate legal entityship, the limited liability, so that they don't have to pay beyond the amount unpaid on the share or amount guaranteed. So limited liability. But at the core of it is the ease of transfer. Because when you become a member of a company, how do you do that? You become a member of a company by buying a share. Okay, so here we are talking only about companies limited by shares, right, sir? Please don't bring companies limited by guarantee here. They are there here, but that is separate. And they, in that case also, the member gives a guarantee. But let us not go there. From now on in this discussion, we are concentrating only on companies limited by shares, where the liability of the member is limited to the amount, if any, unpaid on the shares, right? Which means becoming a member of a company is pretty simple. I am a member of the Reliance Industries Limited. How? I just go to the online, buy a share. That's all, period. Over. So it's as easy as that. Whereas other organizational structures, to become a partner of a partnership firm, there should be a deed reconstituted, and you can't have more than 50, all that stuff. So, having said this, let's look at the topic. So, Chapter 4 of the Act deals with share capital and debentures. Okay. So, what we are actually doing here is looking at the liability side of the balance sheet. If you look at the balance sheet format, look at the liability side or the sources side, you'll find on top of everything else is the shareholders funds, which is basically share capital, free reserves, and then you got this share application money pending allotment. That's it. Then, of course, you got the debt or the loans, got the non-current liabilities, current liabilities. That's it. So what you're now seeing is the liability side of the balance sheet. Other than current liabilities, you're seeing the debt part, the equity and the debt. So share capital is the equity, the owner's funds, the amount invested in the business by the owner. Right, sir? That is called capital. For a company, it's called share capital. Of course, as in all cases of Companies Act, every chapter has an associated set of rules. So we have the company's share capital and debentures rules 2014, amended regularly. So we'll deal with that. So whenever necessary, wherever necessary, the rule will also be studied. Right? So here again, this topic can be divided into two parts. Though there are no parts, it's a single chapter. It's not two parts. As in prospectus, you had two parts. And 42 was one single section in part 2. Here, it's not like that. But the bulk of the sections deal with share capital, as I said, equity. And the single section 71 plus with the rules, elaborate rules, deals with debentures. Right? Section 72 is not there. Okay, so there are some exclusions which are there. So this is an exclusion, right? So, good. Before we get into it, let's see. Hitesh Jain is there. Good morning, sir. And Yogita Kunwar is there. Good morning, madam. So if others are there, they can just put in a good morning there, and Prabhas Jain, if he's there, we can put in a hello. Yeah, a lot of people have started. Okay. So Ankit Gupta, Mahadev Bharadwaj. Good, yeah. Nice to see all these. Mantanjali's first time. I didn't see her earlier. See, the problem with these online classes is you can't see, obviously. So this is the only way you know that they are there, right? Good. Very important topic. Let's hope we'll enjoy ourselves. Let's hope the queries keep coming. But don't ask queries which you know the answer. I mean, sort of don't ask very simple, because see, the beauty of this topic is many of these concepts you would have studied, or you will be studying, or you should be studying as part of accounting. Corporate accounting, you will be studying. In fact, what we are now going to discuss would give you the legal foundation for the accounting entries you are going to pass there. So the accounting entries you're going to pass in accounting, corporate accounting, have their legal base here in this chapter, right? So we'll do that. Wow, this is a topic, usually if it's a physical classroom, I would have the blackboard behind me and I would be able to do this with possibly a chalk or a marker or whatever. But here I don't, and it's impossible for me to create this on a the diagram or whatever. So I thought I'll as well, very, very fundamental. What I'm now discussing is very, very conceptual. Okay, conceptual. Sometimes, a subject may have a conceptual base. Then, of course, you have the details. The details are like this, blah, blah, 60 days, 30 days, today, tomorrow. All that is details. But the conceptual base is very important. Basically, how is the capital of a company different from that of a sole proprietor? The capital of a sole proprietor is nebulous. Nebulous means shapeless, constantly changing. Why? Because, see, you don't keep it separately. This guy introduces money in the beginning, then he may even draw the next day. He may draw out of the capital next day, drawings. The capital goes down. Then the end of the year profit is added. So continuously it changes. Sometimes people may operate a current account, but for a sole proprietor, it doesn't matter. So capital of a sole proprietor is a shapeless, constantly changing. It may go down, it may go up, etc. The capital of a partnership is also similar, right? Shape is nebulous. If you total up all the partners' capital, you will find the number is keeping on changing. It's a moving target because each partner will have drawings, he'll bring in, etc., etc. You might operate this account for salary also, so on and so forth. Interest, everything, that's wrong. Okay, you should have a current account for the partners, separately operating. Ideally, what I suggest is have a current account for the running activities, have a single fixed capital. But even though we may do this for accounting or for the display, the fact is that it's all combined. But the only difference here is that this nebulous, changing, shapeless mass is now divided between two or more people. So you can see that plus sign there in the middle, which means each partner gets a share, right? But the minute you talk about share capital of a company capital, it is fixed. The capital of a company is fixed. Not only that, that fixed capital is divided into units of equal value called shares. So the minute you get to company form, automatically you see this grid. I'm not a great artist, so okay, I'm a reasonably good artist, but I wasn't, using a scale or anything like that. This would be perfectly equal. Each square, see the area you could actually measure in these squares. So each square has the same dimension, and that each unit in this grid is called a share. That's why definition of share, in the Act, the definition of share, okay, section 2, subsection 84 of chapter 1, sometimes may sound silly. Share means a share in the share capital of a company and includes stock. What do you mean by share means a share? See, this entire grid is the share capital, right? The single unit is called a share. So a share is a share in the share capital of the company. Now you as a member can acquire any number of these units. So you want 3, 2, 5. Somebody else may have a whole big chunk. Of course, the grid is not as small as I have drawn it here. Imagine this grid for Reliance or TCS. So it's huge, right? What is the dimension of the grid? Number of shares. So where will you find that? You'll find it in the balance sheet. Okay, of course, you'll find it in the memorandum. In the memorandum, we will call it authorized capital. The maximum number of shares that this company can issue, authorized capital. mentioned in the memorandum capital clause. But what happens? Company issues. That is called issued capital. Then paid up. Or first, then subscribed, then paid up, blah, blah. We'll come to that later. Point is, throughout we are talking about this single unit called a share. So I gave this possibly boring and unnecessary, possibly useless, elaborate explanation to give you a conceptual basis. Okay. Later on, when you come to dematerialization, please, it's so easy. This grid goes on to a computer memory. That's all. And each of these single units gets a unique ID on the system. Okay. Right. And we are able to associate it with the member. And we maintain the share, we maintain the details of capital in electronic form. But once you understand this, what's the big deal here? How does it matter whether it's physical or in the records of a depository in electronic form? Share means a share in the share capital of a company and includes stock. Let's get over with stock here and now. What is stock? Stock is nothing but a bundle of shares. I'm repeating, a stock is nothing but a bundle of shares. Why do you have stock? What happens is you take 100 shares and you make them into a single stock. Now, though this provision is there in the Companies Act, right from 1956 to now also in 2013, I've never seen a company issuing stock. Nor is stock traded in our NSE or BSE. We trade shares. What is traded on NSE and BSE? What is traded meaning? Bought and sold by people like you and me on that NSE and BSE is share. We don't have stock, but the provision is there. The facility to issue stock. That is, you combine 100 shares and you make it a single stock. Why? Because when you're buying and selling in bulk, it makes sense to do it in stock rather than shares. So somebody is buying, say, 15,000 shares. Instead of buying 15,000 shares, they might combine 1,000 shares to make a single stock. So instead of buying 15,000 shares, they will only buy 15 units of Reliance stock and hold it and all that. That's not there in India as of now. Personally, I'm not aware. I'm sure many of you are Google kings and queens. You will give me the answer in case there is any company which has issued stock. Okay. And I would love to know that, but I'm not aware of it. And it's not important also, right? Don't bother about it. That's it. So stock is this. Similarly for debentures also you have stock. Now, once you understand what for share, for debenture, what is the big deal? If you combine a lot of debentures into a single unit called debenture stock. Again, why I will do it? When I'm trading in debentures, it is easy to trade in stock rather than in debentures. That is all. Nothing easy or trick about this. Don't break your head. No need, okay, to worry about it. Practically not relevant. Theoretically, hai, section mein hai, so please learn it. You know it now. Shares, debentures, or any other interest of a member in a company to be movable property. Now, here again, you need to have a conceptual basis. If you have read your Sale of Goods Act well, you will know that Sale of Goods Act deals with movable property. Am I correct? The Transfer of Property Act deals with immovable property. The Sale of Goods Act deals with movable property. Now, important point, when does ownership in movable property get transferred? When does the ownership of a movable property, goods, whatever, how does it get transferred? Movable property is defined in Sale of Goods Act, correct? Include stocks as, remember, go back to the definition. If you've forgotten it, please go there and you will read it and you will find that movable property includes stocks and shares and stock, right? So shares and stocks are movable property. There again, they confirm it. Here again, they confirm it and say shares are movable property. Point is, ownership of movable property is transferred by mere delivery of possession. Ownership in a movable property is delivered by mere delivery of possession. So all I need to do is transfer. In the case of physical shares, I should hand over the physical possession of the share certificate should be transferred. If you are the owner and you are having the physical share certificate, if you want me to get ownership, you should give me physical possession. I'll take over. Of course, you should ensure that you got your money. Otherwise, what to do? I'll run away and you won't get the money. That is not the point. Whether money was paid is not the point. Whether physically the certificate moved from you to me. Of course, some kind of a documentation is good to say that I didn't steal it from you, but rather bought it. But mere transfer of possession is enough to think. Ideally, I would have some sort of a document. If it's a goods, if you're talking about other types of goods, then goods definition under the Sale of Goods Act, goods definition talks about every type of movable property, including stocks and shares. Goods definition. So basically, shares are goods. Am I correct? Okay. Having said this, why then share transfer form? Why share transfer form? This is a bigger question. I gave the answer already in the last session. No, in the first incorporation session, I told you there is a contract between the company and the members and intrastate. This contract is coming to an end for the seller and it's going to happen for the buyer. We have to inform the company about this. Otherwise, you will not be a member there. So the seller should tell the company, hey, I'm no longer your member. So they will remove his name from the register of members. The buyer should inform the company in writing. Who is a member? Every person who applies in writing to become a member. That application is the share transfer form. Signed by both the transferor to say I'm getting out and the transferee, the buyer, to say I'm getting in. That is all. Whereas ownership, it will transfer the minute physical possession is given. Which is why in electronic form, what happens? From your DP to my DP. That's all. I'm getting virtual possession. Not physically, I can't hold that electronic record. Yeah. Instead, what happens? I'm getting virtual possession. How do I hold my shares now? Virtually in the electronic records of a depository on the cloud. So how do I control it? How do I have a password? I have a user ID and a password, which only I can use. When only by using that, I can release. Otherwise, the share cannot be touched. So as we get into more and more digitalized world, concept of possession needs to get changed. Many things you are not going to possess physically. You are going to have possession virtually. So that's about it. And it's so convenient when you hold it virtually, right? See, think about it. We are moving into a digital world where everything can be held virtually. Not everything. Some goods still need to be physically held. For example, a car or a motorbike, okay, or a chair where I'm sitting or a bed. You can't have a virtual bed on which you can sleep. But certain things, can be held. Some goods can be virtually held, like our shares, which is what we're going to see when we come to dematerialization. Shares, debentures, etc. can be transferred in the manner stated in the articles. The articles of association of a company will contain detailed rules for how shares are transferred. Oh, this has nothing to do with ownership. This is the rule placed by the company to inform the member that, look here, you want to be a member of my company, then you have to inform me. You bought the share has become yours now. You are the owner, no denying it. But how do I know? So you inform me that you are the owner so that I can change the register of members accordingly. So this is an extra dimension in the case of shares. See, I am the owner of a Rado watch, yeah, right? I'm not going to sell it ever. But then if I decide to sell it and somebody buys it from me, he may pay me something, right? Neither of us has to write to the Rado company to inform that I am no longer the owner, he is the owner, right? Because movable goods, mere transfer of possession, ownership transfer. Shares also like that. But because there's also a contract between the company and the members interstate, there is the need for a share transfer form. More about it when we come to, not more about it. You understood the need for the share transfer form, right? But there's elaborate, in the Act also there are sections for transfer of shares, registration of transfer of shares. We'll talk about it a little later in this topic. So I'm going to run a little fast here for obvious reasons. So No, Mantanjali ji, you are not new. For the last 3 classes, I have not seen your name in the query pad. You never raised a query. That is why I was saying, hey, Mantanjali is here. And first time I'm seeing her name like that. That's all I meant. Good. I'm really not aware of connection. Yeah, if there is any problem, to my knowledge, my connection is very good. 100% my connection is very good. I'm not really seeing any problem. Kindly check it at your end. Check it up. Or else raise a ticket with the, or call up the tech support in ICI. That's the only way out of this. Exactly. Pooja is used a very beautiful word, you know. The share capital of a company refers an amoeba. Exactly. The amoeba is shapeless, constantly changing. Absolutely. This is exactly the shape of an amoeba from a biology book. But that's how it is. Constantly changing. Whereas the minute you come to share capital, you see a more rigid structure. A more rigid structure, the form can, for example, the human body is very rigid. You cannot change. If you do, that's very dangerous. Okay. So, wonderful. See, for sale of goods, there is no documents of title. Nothing called document of title. Unlike an immovable property which has title deeds. Movable goods have no title deeds. Again, I'm repeating, Maheshwaranji, please get the legal basis clear. If you want, you can go revisit Sale of Goods Act again and try to review it. But you don't have to, just listen to me. Ownership in goods is transferred by mere transfer of possession, right? There is no title documents for mobile goods. For immovable goods, yes, there is a title deeds and all that, right? A lot of formalities are there for immovable goods. Beautiful. Yeah, I already mentioned very clearly, don't go to companies without share capital, ABI. We already covered it when I spoke about it in incorporation. Basically, interest is, if the company is not limited by shares, then it's like a partnership. Yeah. What is a share? It's like a shares. Okay. So each person brings in that money. That becomes the interest. To that extent, he'll be entitled to profits. That's all. Okay. That's about it. Nothing. Don't break your head. Again, 98% of companies are companies limited by shares. 2% and some of them are Section 8 companies are limited by guarantee or not having share capital. Right? So let's not see if it cannot be that the limitation of liability should be either by guarantee or by share, limited by share. You cannot have a company which has no share capital and also not limited by guarantee. So usually what happens, a company is limited by guarantee may or may not have a share capital. Unlimited liability company may or may not have a share capital. That's all. In those cases, how to calculate how much profit each is entitled. We'll see how much money he has bought in. Right? And based on that, we will decide. Okay. Sir, there are, as far as Mr. Miss Rafiq Bhai Memon, don't be very, very careful about reading books. Today, Companies Act is, it is like the amoeba, constantly changing. Okay, there is none, you can't hold it and say this is it. So please do not use an old book. Okay, I don't know, when you say old book, I don't know what it is. And let's not also put dates and say amendment after. Please prefer to read the Institute COM material. The Institute is really taking a lot of effort to update the material. We got wonderful people in the Board of Studies, highly intelligent professors who take a lot of effort to read the law, understand it, and update the material. So study material should be your own, and it's freely available, downloadable from the net. Just have to go to the IAS BOS portal and download it virtually, PDF ka, and then put it on your mobile. So wherever you are, if you are doing your articles or if you are working somewhere or you're doing nothing sitting at home, you don't have to look at the YouTube or don't look at the video. Look at your study material. Just go through it. So it's as simple as that. Virtually you can do it. Please note. The reason I'm telling it is because I recently, I decided, Sari, let us see, because I have a lot of regard for one huge, I don't know, name that publisher in this forum, but well-known publisher whose another author I have the highest regard, where I have never had any problem for income tax. So the same publisher ka company law book, I purchased it. You won't believe what an atrocious price, 500 rupees or something they've charged, for 700 rupees or something. And the bookseller, because I was an old author and my book used to be in the shop, he used to give me a trade discount of 20-25%. So I got it. The point I'm making is every fifth page, it is outdated. So don't please read books which are old. This is the answer to you. So please don't. Okay. There are a lot of amendments. If you ask me what amendment, I am covering amendments in my lecture. Institute material has the amendments. But if you read some book which is not proven, you will be in trouble. Be careful. So I'm not against books. I am an author myself. But this law today is constantly changing. So authors, see, if somebody wants me, if any publisher wants me to write a book, I will say no. I have nothing better. I got better things to do in my life than keeping on revising based on these amendments and all that. So for my notes, I do it. Before I come for the class, I see to it that amendments are covered. Inshallah, maximum I have included, but perfection is with Allah alone. I'm only human being. One or two left out, we will see. But to my knowledge, the perfection is with Allah. Again and again, I'm telling, I'm not claiming that this is 100% accurate, but amendments, wherever possible, have been updated in this slide. So when I upload this PowerPoint, which I will do only at the end of this 4 sessions, when the topic is over, I will upload it. By now, already 2 topics notes have been uploaded along with assignment. Okay, please work out the assignment. If you have any doubt on assignment, do ask. Okay, at the end of this session or any session, you can ask me if you have a doubt. Point is, please don't, ask for notes now. It will come at the end of the 4th session, 9th, I think, 9th of June. It will be the last session. Inshallah, I will send it at that time, right? So these notes contain amendments. So all that our friend Ms. Memon Rafiq Bhai has to do is listen to what I'm teaching. When the notes comes to you, read the notes and rely on the Institute Board of Studies material. There's no need to waste your hard-earned money on books which are going to be outdated very fast. Okay? And none of this is the act itself. Believe me, please don't, let me not waste your time because some other people will get angry with me. But don't waste your money on books. Institute is doing a great job. Attend these live coaching classes. The notes provided by the faculty, please go through them. Because we are operating for our own institute, we take a lot of care to ensure that there is no mistake, and read that Institute material. Okay, that is more than enough for law. If you only do this, you will get minimum 60 to 70, 60 plus assured. Please, no need to buy costly books and all that. Okay, coming to the point, I'm going to quickly run here because many of these topics are known to you. You are all a highly intelligent set of people. So you've already gone through it elsewhere. So quickly, let's. Equity share means all share capital, which is not preference share capital. You'll find this not definitions a lot in Companies Act. Okay. Public company, one which is not a private company. Okay. Therefore, private company is defined. Equity share is one which is not a preference share. Therefore, preference share capital is defined. What is preference share capital? It is that part of the issued capital carrying preferential rights. So one thing I'm understanding, authorized capital, issued capital, etc., is common. Both equity capital and preference capital are part of the capital. So in any section, if you see paid up capital, if you see the word paid up share capital, please note it includes both equity and preference. Later on, you'll be seeing a lot of limits are calculated for dividend, declaration of dividend out of reserves and all. There they'll say paid up capital. When they say paid up share capital, it includes both equity and preference. If they want only equity, they have to jolly well say paid up equity share capital or issued equity share capital. They don't say that silent paid up share capital includes both equity and preference. Now, what is preference share capital? It is that part of issued capital carrying preferential rights. What rights are they? With respect to payment of dividend, whether by way of fixed amount or fixed rate. Fixed amount means, see, dividend, just for your information, you learn it when you come to dividend topic. Dividend is calculated on the face value of the share. If a company share face value is 10 rupees, the market price may be 400. The dividend will be paid only on 10 rupees. Usually they will either declare it as a percentage. For example, 20%, 30%. Sometimes, it's so 10 rupees is so small, na? Therefore, they will say 300%, which means 30 rupees. 300%, like that. Sometimes. For example, Infosys share is 1 rupee. So even if they declare 5 rupees dividend, it will be 500% dividend they will declare. 1 rupee. Face value is 1 rupee. A share which is currently quoting at what? I don't know. 1,000 something, 700, I don't know. 2,000, I don't know. Whatever. I own the share, but I don't care. So I will not see constantly. I'll wait when I know when to see it. Chalo. Now, point is, dividend can be either a fixed amount or a fixed rate. So it can be, if it's a share of 10 rupees, they can say 1 rupee per share. 1 rupee per share. That is fixed amount. Or 20% per share, which means on 10 rupees, we'll calculate 20%. So when the dividend is declared and paid, first, we have to pay the preferential shareholders. Only after the preferential shareholders have been paid can the equity be declared a dividend. You cannot declare equity dividend unless preference dividend has been declared and paid. Usually preference shares, when they issue itself, we will fix the rate. So which is why you will find 8% preference shares, 12% preference shares, which means what? The dividend is 12% on the face value of the preference share. At the time of issue, we decided. So that has to be paid. Only then can we declare equity dividend. Similarly, in the event of winding up, when the company comes to an end, all the assets are sold, all the liabilities are paid first, then the queue is slowly completed. Secured creditors, unsecured creditors, everybody paid. Money is still there in the box. So the liquidator now will call the preference shareholders first, because they have a preferential right. And he will see what is the amount due to them. That will be paid. Then, if anything is left out, the equity will get it. So, preference shares have the preferential right with respect to payment of dividend and repayment of capital in the event of winding up. Okay. This section 43 shall not apply where memorandum or articles of association of the private company so provides. This means a private company may by its article state that the company may issue preference shares which will have preferential payment of dividend, but no preference as to the repayment of capital in the case of winding up. Which means, while issuing preference shares, private companies can decide whether to give them preferential repayment or not. Okay, this is pretty new, and they've done this. The section 43 does not apply to a private company. It applies, but if the memorandum or articles provide, they can change it. They can say 43 will not apply and they can provide what they want. This is one of the facilities available to a private company. If you're looking at what are all the facilities available to a private company, this seems to be one of them. So we already saw there are two classes of shares, equity and preference. Now, equity there is two types. Equity share capital again has with voting rights and without voting rights. With voting rights, without voting rights. Not without voting rights, with differential rights as to dividend voting or otherwise. More about it in a short while. We'll be seeing in detail procedure for issuing shares with differential voting rights. At that time, what is voting right now? We will talk about it. Right now, know that equity is of two types. One is normal equity. You can say normal equity with voting rights. So, one share, one vote. Then you have shares with differential rights. Maybe they'll get fixed dividend, because normally equity, no fixed dividend. Every year, the board of directors will decide what is the dividend. But here they might say for equity also will give fixed dividend. 4% dividend fixed, but voting right we will control, or 12% dividend fixed, but no voting rights, or half vote. So 1 share, 2 shares, 1 vote, like that, or 3 shares, 1 vote, like that. So voting right may be restricted. It is possible to issue such shares, okay, equity shares with differential rights as to dividend, voting, or otherwise. If you're going to do that, right, there is an elaborate procedure for that. We will see this. Preference share capital, okay, this we saw already, carries preferential rate, dividend payment, etc. We saw that earlier. Now, some of you might want to know or ask, even I sometimes ask myself some of these questions, because I know students like to ask practical questions. So I do some little bit of research. So has any company issued, Indian company issued shares with differential rights? Because abroad it's quite normal. But in India, we are yet to see it being done, by all companies. But as of now, maybe some more have joined the bandwagon. This is a little dated information, but Tata Motors and Pantaloons Retails, which is now Future Enterprises, or the great Kishore Biyanika company, right? I mean, great. He's called the Sam Walton of India. Retail. Mukesh is always eyeing, what to do, because Mukesh wants to be big shot in retail also. But Biyani already did the magic with Pantaloons. For example, 1/10 voting rights means what? 10 shares, 1 vote. 1/10 voting right means if you are having 100 shares, you won't have 100 votes. You have only 10 votes, 1/10 voting right, as compared to ordinary shares, for a fixed dividend of 5%. 5% fixed dividend. Whatever dividend is declared for the equity shares, the DVR will get 5% more, 5% higher dividend as compared to ordinary shares. For example, if this year Board of Directors have declared 30% dividend, our friends will get 35. For that additional 5%, they have to forego voting rate. So for every 10 shares, they get only 1 right, 1/10. Of course, you might ask me, why would people want to do this? Because it's a human choice here. Giving him an option. See, if Mr. Dhirubhai Ambani had told me, means as an ordinary shareholder, if he had come out with DVRs and he said, Shrikant, Dhirubhai is telling, not even Mukesh or Anil, definitely not Anil, even Mukesh tells I will listen, but Dhirubhai says, Shrikant, I will give you my share, no voting right, but I will give you assured 25% dividend. Do you want? Assured 25% dividend, do you want? So I said, no problem, sir, I'll take it. That is the confidence I have in Dhirubhai's ability to generate money. And I'm assured getting 25% every year, no problem. Something like that. And also, I'm getting an equity share, which means when the share price is going up, I will also get the benefit now. My voting power is not going to influence my share value in any way at all. Maximum, they might do a little bit of a reduction in the valuation for reduction in voting. But even then, suppose Reliance share is quoting at 2,000 for the normal equity share, my DVR share will quote at 1,900, 800 or 700 possibly, or whatever. Okay? Because money is the same now, right? At the end of the year, I have to get back my money, same amount. It's not as if I'm getting back less. It's just that I don't have a voting right there. Chalo, no problem. This is my view. Some of you may have a different view, or some of you may have a doubt, no problem. Yeah, they are all listed and they will be traded in the same way as the normal shares. It's not as if these shares are not listed. They will be listed. You can buy and sell in the market. So only thing is, you will not be able to get voting right. When you attend the meeting, when the normal shareholder will get single vote per share, the DVR will get only for 10 votes, 1 vote. So their ability to influence the decisions of the company is less. But tell me, even these normal shareholders, do they get to influence? Seriously, no. When we come to management and administration, I'll tell you. Now, if nobody goes for the meeting, they simply, so it doesn't really matter is the point. Okay, again, as usual, problem with the video. My connection seems to be all right. There's no problem with my connection. So it must be something at your end. Check it out. Or else, my humble request now, contact the Institute tech support guys. Please contact the Institute tech support guys. There must be a number there. Tell them that there is lagging. They may advise me, then I'll take, because I cannot take the view from a single student and keep on wasting my time finding out what is wrong. Class will go on. Okay. So just check up your own connection, please. I know you will say my connection is good, it's mine, but it's not mine. Kindly check up your connection and then talk to the Institute of Tech Support people. There's a gentleman now in this group. If you talk, yeah, please advise me, sir, because students keep on saying lagging. That's why I'm getting worried. Okay. My connection is good. I'm informed, so don't please don't interrupt the class with connection issues. If there is a problem, I will be informed by the Institute Tech Support and I will accordingly take necessary action. Okay. Moving on with the topic. DVR, 5% higher rate is company's choice or a statute? No. This is the choice of the company. See, Tata Motors has come out with an issue saying, I will give you 5% more rate. It's a contract now. So Tata Motors is issuing their shares with these terms and conditions. So if I am happy with that, I will apply, offer. He accepts it, contract. It is 100%. What the law has done is it has given a facility for issue of shares with differential rates. That's all. The Act says you can issue equity shares with differential rates. How those rates will be differential, you decide. You can have anything. You can see here they said 1/10 voting right. Somebody may say no voting right also, only dividend, like that. But normally they won't do that. See, 1/10 voting rate is as good as not. But something. And dividend will, obviously, if I'm going to forego my voting right, I will need some compensation, right? That is this higher rate of dividend, right? Now, we will talk about Rule 4, which deals with issue of equity shares with differential rates. So these are the conditions to be satisfied. First condition, there should be a provision in the articles of the company authorizing this. So the articles of the company should have a clause which says the company board of directors can issue equity shares with differential rights. But believe me, this will be the standard articles, it will be there, definitely. If not, you have to amend your articles and include it. Okay. Then, the current members of the company, should agree to this by passing an ordinary resolution. Okay. This is a matter which has to be done through postal ballot. See, later on when you come to management and administration, I will talk to you about postal ballot. But right now, in simple terms, what is postal ballot? See, if the member comes to the meeting and votes, that is physical ballot, right? Here what I'm saying, you don't have to come. We send all the details and then we send him the self-addressed stamped envelope and we give him 30 days time. Please tell whether you are okay or not. Tick. So number of shares, tick. Fold, put in thing, send it. There will be a scrutineer who will collect all the postal ballots. Then on the appointed day, it will be opened and counted. That's all. So your vote will be taken through post. Okay, postal ballot. Instead of coming in person and voting, you are voting through postal ballot. That thing, no, it is not some rocket science. It's just, today, we have gone beyond postal ballot. We have gone to electronic voting, where the guy has to only log on to a website. The form will be there, online form will be there. Simply has to check, submit. He will have to submit the user ID and password given, unique one-time user ID, or sometimes OTP, so that then he'll go in, finish voting, submit. All that happens in a matter of 5 minutes. He can finish the voting and come out. Okay. Then all that will be collected, and on the date of the meeting, physical votes also will be taken, and finally the result will be announced. More about it when we come to management and administration. Right? Chalo. So, point is, this should be authorized by an ordinary resolution. In the case of a listed company, it shall be authorized through postal ballot. Physical meeting will hold, but postal ballot also will have. The voting power, see, this part may be a little confusing. I will read it, then I will explain it with numbers. Voting power of all shares with differential rights not to exceed 74% of total voting power. That is, when you issue differential rights, you cannot do it in such a way that the voting power of the differential rights guys is more than 74% of the total voting power. This is not easy to understand without a practical number example. I will explain it. Let us see if you can understand. 5%, okay, I'll answer Mantanjali's question. 5% higher dividend will be given only to the shareholders with differential voting right. Since this man is foregoing his voting right now, instead of 1 share, 1 vote, he is taking 10 shares, 1 vote, 1 by 10. Therefore, he is given 5% extra. The normal equity shareholders get 1 full share, 1 vote, complete vote, will not get 5% more. Got it? That's why there are 2 categories of equity share capital. Normal, who will not get any additional dividend and all, and who will have 1 share, 1 vote, and shares with differential rights. How these differential rights will be decided, that is up to the board of directors to decide. Right. Now, we will come to I'm coming as near to the mic as possible and talking. I'm raising my voice. I don't know why these complaints are there. Please. One more suggestion to many of you is, if you have decided to attend online classes, please do not use your mobile phone. I'm sure you don't. In case you do, then you will have a problem. And always use, because sometimes the speaker in your laptop may not be strong. I may be speaking normally, but your speaker may not be able to pick it and give it to you. Therefore, use a stereophonic earphone. Please invest in that. It's a good investment in equipment. Please use a stereophonic earphone. When I am attending online webinars and seminars, I always use a earphone, stereophonic, so that you get very good output, which is my humble request to you. If you are using it, sorry. If you are not using it, kindly use it. Then all these technology issues can be behind us and we can concentrate on the topic. Okay, so here we have a small example. For a particular company, the number of normal equity shares is 1 lakh. Normal means no differential voting rights. There are other equity shares with differential voting rights, that is 2 lakhs. So this company has 2 categories of equity share. In the authorized capital, we will say equity shares, so and so. Equity shares with differential voting rights, separate. Separate line item. You can't combine it, these 2, and put in a single line. Separate. Equity shares with differential voting right. 2 lakhs. Now, the voting right for a normal, maybe there is some additional dividend and all, we will not bother about that. What we are bothered about is voting right. So, normal equity shares, 1 vote per share. So, 1 lakh shares, 1 lakh votes. Straight away. 1 lakh votes equal to 1 lakh shares equal to 1 lakh shares equal to 1 lakh, because 1 vote per share, 1 lakh. So, straight away, our equity shares with DVR, differential voting rights, 2 lakh shares, but 1 vote for 2 shares. So, half vote only he has. So, 1 share is only half a vote. So, 2 lakh shares, only 1 lakh votes. Only 1 lakh votes. So, 2 lakh shares, but because of the differential voting right concept, he is getting only 1 vote for 2 shares. So, 2 lakh becomes 1 lakh. What is the total voting power? It is not 3 lakhs. It is 2 lakhs. Why? Because this 2 lakh is not equal to 2 lakh votes. It is only equal to 1 lakh votes. Therefore, 1 plus 1, 2 lakhs is the total voting power. What is total voting power? If a meeting of the company is held, when a meeting of the company is held, if all the shareholders attend and vote, if all the shares, if all the votes are exercised, what will be the total number of votes? That is the total voting power. In this company, if all the shareholders attend and vote, what will be the total number of votes? These 1 lakh fellows will give 1 lakh votes, 1 lakh. These 2 lakh guys will come and vote, but their vote will be taken as only half, 1 lakh. So total number of votes is 2 lakhs. Now, out of this total voting power, what is the percentage of equity shares with DVR? equity shares with DVR. Equity shares carrying DVR's voting power is 1 lakh. So out of the total voting power, the voting power of equity shares with differential voting right is 1 lakh. 1 lakh by 2 lakh into 100 gives me 50%. 50%. The rule is voting power of all shares with differential voting rights not to exceed 74%. Therefore, this company is complying with the rule. But suppose they issue more. At any stage, if this differential voting rights ka voting number of votes exceeds 74% of the total voting power, that means then not allowed. Not to exceed 74. Up to 74 you can have. 75 no. Okay. That is what they are trying to say. The reason is a company should not issue some nominal equity shares, normal, or maybe promoters keep the normal equity shares and the rest of the equity shares are all DVR. So that 25% held by, so 5% held by promoters, remaining all DVR carrying said 1/10 vote. That way you can raise a lot of money from the public without giving them any participation in the company. So they say you can do this, but the voting power of equity shares with differential voting right should not exceed 74%. In our example, this number is exactly 50%, which is less than 74%. Therefore, it is complying with the rule. Okay. So if you want to take a photograph of this slide alone, if you have a doubt, take a photograph of this slide, just keep it. Then if you raise a query, I will do it. In case of shares with differential rates, can a company issue with higher DVR in comparison? What higher DVR? Not clear, Mr. Swarup Singh. Higher DVR, what do you mean? I don't know. Higher differential voting rates. What do you mean by that? Okay. So can you clarify it a little more? Yeah, beautiful. So just clarify your question, I will answer it. Continuing with our conditions, number 4, there should be no default in filing financial statements and annual returns for 3 immediately preceding financial years. We'll be seeing these sections going forward. Annual return will be seeing, financials 92 annual return will be seeing, financial statements will be seeing when we come to accounts. So it's those compliances, filing of the annual financial statements with the registrar, MCA website, filing an annual return should be done, and there should be no default for 3 immediately preceding financial years. Also, there should be no subsisting default. See, as of the time of issue of the differential voting right shares, on the date of issue of differential voting right shares, there should be no default. That is called subsisting default. Though in the earlier day, they might have had a default, they might have made good, they might have paid it. But today, when you are issuing the differential voting right, is there any default? In what? In payment of declared dividend. Please note, dividend on equity shares, even on DVR, differential voting rights, dividend is not compulsory. Your board of directors need not declare a dividend in 1 year. Members cannot question this. When you come to dividend topic, you will learn this. So the board of directors recommends the dividend. Members only approve it, either lower, same rate or lower rate. That's all. They can reduce it. They cannot increase it or ask for a. In the case of dividend, the members cannot hold a meeting and declare dividend themselves. Declaration of dividend is board power, not declaration, recommendation. Once recommended, the shareholders declare it. But once declared, it has to be paid within 30 days, blah, blah. You will see that when you come to the topic. Point is, if it is declared and not paid, it is a default. If such a default is there, you cannot issue differential rates. Similarly, repayment of matured deposits. Once the deposit is matured, you have to pay. If you are not repaid, there is a default, you cannot issue DVR. Same way, redemption of debentures, due for that, redemption of preference shares, payment of interest on debentures and deposits. Interest is also included. So if there is any default in any of these things, you cannot issue differential voting rights. In the exam, they will ask you a question where they will talk a lot about DVR and finally they'll put a hook and they will say, company has not has defaulted in repayment of deposits. In which case, your answer should be, if it's a multiple choice, they will try to give you all sorts of things. Basic answer is, company cannot issue equity shares with differential voting right because it there is a subsisting default in repayment of matured deposits. That's all. Okay. So, actually, this is easy to remember. Na? Declared dividend, matured deposit, interest on deposit, debentures, redemption, preference share, redemption, debenture interest. That's all. See, when you're reading itself, you should not mug up. I think logically it will come. Okay. Don't mug up. There should be no default in payment of preference dividend. Also, there should be no default in repayment of term loan with interest thereon to any public financial institution or state level financial institution or scheduled bank. Okay. So there should be no default. Provided equity shares with differential voting rights may be issued upon expiry of 5 years from the end of the financial year when default was made good. Friends, can you see the difference between 5 and 6? 5 is, if there is a past default, it doesn't matter, so long as it is made good. If it is made good, as of now, there is no due. In those days, yeah, I did default in payment of deposit, correct? Then I paid it. Today, there is no default. Then 5 is satisfied. 6 is not like that. Even if there is a past default, if you are made good also for 5 years from the end of the financial year when the default was made good, you cannot issue DVR. See, these small points will make a big difference in the exam question. So they will give you a repayment of term loan. And they will say, so-and-so PFI, there was a default in repayment of term loan. They'll give the date. But this was subsequently made up on such and such a day. So you have to see in which financial year it is falling. And then from the end of that financial year, you have to count 5 years and see the date on which they're issuing differential voting right shares. If 5 years is completed on that date, they can. If it is falling within that 5 years, they cannot issue. Okay. So there is a slight difference between no subsisting default and no default. Because if there is a past default, here for 5 years from the date of end of the financial year when default was good, made good. Default was made good means the amount is paid. The default is corrected. From that, the end of that financial year, for 5 years, you cannot issue differential voting right shares. Then you can issue. Okay. Hope this is clear. Similarly, the company should not have been penalized by a court or tribunal. Now you understand why any penalty will affect your right to give DVR. Similarly, if there is any penalty, even a fine is a penalty. Please don't forget. Okay. Any penalty has not been penalized. Even a fine. Okay. Disqualified. The company has not been penalized by a court or tribunal during the last 3 years of any offense under RBI Act, SEBI, SCRA, FEMA, or any other special act like SURFACE. These are all special enactments. So that you have to ensure that there is no offense. You should not have been penalized. Okay. Right. Good. The company shall not convert its existing equity share capital with voting rights into equity share capital carrying differential voting rights. If you already have normal equity share capital, not having differential voting rights, you cannot convert it into equity share capital carrying differential voting rights. Okay. The holder of the equity shares with differential rights shall enjoy all other rights, such as bonus shares, right shares. In case the company issue bonus, these fellows also will get. If they issue for every 2 shares, 1 bonus, our friend also will get 1 share for every 2. If rights are offered, same, which the equity shares are entered into, which means the market price of the share, to my knowledge, cannot be different from the normal equity shares. It should not be. Okay. So the holders of equity shares with differential rights will enjoy all the same rights. The register of members shall contain all relevant particulars of equity shares with differential rights. That's it. right? So this is the differential voting rights. Sometimes they ask you a question in the examination, just be aware. Okay. I have prepared a chart of section of thank you. Fantastic, madam. Please continue with that. Any such things will work out. Fantastic. Thank you for very good. Exactly. The company will try to give as less as possible to the DVRs. But then via media, because if you give too less also, nobody may want it. So this is a financial decision, like pricing for shares and all that. There is no law that can support you there. It's your intelligence you have to use and decide what will satisfy a shareholder. What is the difference between matured deposit and fixed deposit? See, fixed deposit is a name given to deposits. Matured deposit, see, you are with your bank, you have a fixed deposit. In companies, you don't call it fixed deposit, but nothing wrong. It's called fixed deposit because it is for a fixed term. See, whereas your current account is called a demand deposit. Your SB account is called a demand deposit. Why? Because anytime you can go to the bank and ask for the money. Anytime you can go and take that money out now. Writing a check, you can close that account and go. That is called demand. Whereas fixed deposit is for a fixed period, term. 1 year, 6 months, 3 months. So interest will be different accordingly. When that fixed term deposit matures, what does it mean? The date for repayment has come. At that time, it will be called matured deposit. Okay. So when all the deposits are fixed deposits only, because they are for a fixed term. But when the term is over, you have to repay now. On that date, it will become matured deposit. Okay. That's it. Hope this is clear. Moving on, share certificate. Now, in those days, I use these words, in those days. Why? I lived in those days. That is the point. I was born in 1966. In fact, one Mr. K, I don't know if he's here. He's there. Just I'm mentioning Mr. K and he comes in. Okay, let us see. Sahil Jose asking, the voting is made for whom? Yeah, what do you mean by that question? Hey, you have to clarify some of these questions, sir. Voting is made for whom? Shareholders come and vote on various topics. Suppose you are whatever subject. See, company has no brain. Who takes the decision? Board of directors in some matters. In some matters, member. So take the decision, how they will take it. They'll come to the meeting, vote. That is what we mean by voting right. So every member has the right to come and vote. So when we come to management administration, you will know more about voting rights and all that. In detail, we'll talk about it. How to pass resolutions and all. Okay. If a company defaulted on May and made good on June, from that financial year up to 5 years or from June. Good question. That is Mr. K. See, they're clearly saying upon expiry of 5 years from the end of the financial year when default was made good, which means assuming current year June, so current year May, they made default. June get corrected. So this financial year will end when? This financial year 22-23 will end on 31st March 23. Then you have to count 5. So 5 years from the end of the financial year means what? 24, 25, 26, 27, 28. So 28, 31st March 28, 5th year will get over. Then 1/4/28 onwards, enjoy. You can do whatever you want. Okay. So, good, sir. Thank you, Mr. Vyas. So the point here is, coming to physical shares. Those days, we used to have physical share certificates. In fact, all companies, including listed companies, were only issuing physical share certificates. Okay, this was, I'm talking about 1980s, even 90s. In 91, India started changing. Thanks to Manmohan Singh and Narasimha Rao, the two great people who took a call. And all the damage that was done for 45 years, they changed it. Okay. The very party which they belong to damaged. But these two gentlemen had the guts to say, socialism is wrong. What we did was stupid. We will go to free market economy and we will get into LPG, liberalization, privatization, globalization. One thing is, if you want globalization, if you want foreign investment in India, they found the share market needed a lot of, amendments. It needed a lot of, changes to be made in both in the primary as well as secondary or share market. So one of the things which was lacking was all over the world, physical share certificates are out, and all over the world, trading was happening with dematerialized digital shares. In India, in 90s, we still had physical certificates, right? Physical share certificate. In fact, some of these share certificates are today, I think, collector's items. I have a couple of them, which I sort of, after cancellation, I took it back from the company, but normally they won't give it to you. But I took it back. For example, EID Parica old share certificate is there. English Electrica old share certificate is there. It's all antique shares. Antique. Okay, beautifully it will be printed with flowing, lines and all. But that's only for, art and aesthetics. But for practical purposes, physical share certificates are a pain because they may be damaged. You have to store them somewhere. You have to give delivery, physical delivery. You have to go to the broker. All sorts of problems. You have to stamp it. All sorts of problems. So when the National Stock Exchange was formed, NSE came. They were actively promoting dematerialization. Actively. But there was a huge resistance from dinosaurs like possible, not me, because I was very clear. When what happened was, I quit the market before Harshad Mehta scam. I quit the market. I stopped buying shares before I sold all my portfolio, came out. Then Harshad Mehta scam came. I never entered the market. Then I waited. Then another great gentleman came from Gujarat. One more gentleman from Gujarat, Ketan Parekh. He destroyed. He created the data that, so-called digital, .com king all over the world. Our friend misused it. He did his own fraud. And in around that 2000, the entire market collapsed. It is during this gap, from 91 to 2001, that dematerialization slowly came. I missed the bus. In the sense, I never held shares in that period. But a lot of people bought shares and all that, digital, blah, blah. They used to talk. Finally, the crash came. Everybody lost money, standing only with underwear. And I had no investment. 2002, the entire market collapsed. Reliance, Infosys and all begging to be bought. That is when I entered the market for the first time. I entered the market. So with the minute I entered in digital. The minute I entered in digital, DP. Straight away, I operated with the DP only. First time I entered the market, I purchased Reliance, Infosys, all the blue chips were going at throwaway prices, bargain basement prices. I picked up in 2002, the price of unbelievable prices. Okay, you can't even believe 90 rupees, 100 rupees and all Reliance. I just picked up. But at the time I was advised by people not to buy. They were saying after the Ketan Parekh scam, they were, no sir, Mr. Srikanth, share market, dangerous like that. Anyway, that's a different story. Definitely not relevant. I will not talk about it. But the point is, in between this period, 91 to 2001, slowly dematerialization was promoted. But till such time, physical share certificates were very much there. Still, they don't want to avoid physical share certificates. So there is a provision in the Act for issue of physical share certificates. So physical share certificates may be issued under the common seal or may be signed by 2 directors or by 1 director and company secretary if appointed. If the company is issuing physical share certificate, it is there. Okay. I already told you, share being movable property, possession of share certificate shall be prima facie evidence of ownership. Your entry in the register of member is not proof of ownership. Possession of the share certificate is the proof of ownership. If you have lost the share certificate, you have to go to the police station, make a complaint, get the FIR copy, give it to the company, give an affidavit, give an indemnity bond. All sorts of nonsense you have to do before you get a fresh share certificate. Okay. So possession of share certificate, which is why, physical share certificates are a pain. You have to keep them carefully. And frequently in states like Tamil Nadu and Kerala, we'll have flood. So flood will come and my entire house will be, not my house, many people's house will be floating in the water because, see, luckily my father built his house on a high position. In our area, higher area he built. When I purchased house, I also ensured that my house is on the higher area so that invariably neither of our houses will be waterlogged. In Madras, whenever you have flood, everybody will be saying, you might be seeing TV also, floating and all that. Never our houses. My father was always safer because both of us ensured that we built our houses in that area. Ours will be the tallest. So when the rain falls, all the water will go to the central part. And ours will be on top. Even in that so-called 2015 flood, when I woke up in the morning, the entire city was deluged. But in my road, only up to the calf, there was water. Then that also receded after some time. But the entire area was waterlogged. I couldn't go out for that 5 days, sitting at home without power. I think nightmarish days. Okay. Anyway, why I'm saying now, in that flood, so many people share certificate will get lost. It will get wet. It will go away. It will be washed away, etc., etc. The point I'm trying to make is all this problem was there, but still, Section 46 of the Companies Act empowers the company to issue physical share. Every share in a company shall be distinguished by its distinctive number. So, if you go back to my grid, there are so many units in the grid, right? Each unit in the grid has a distinctive number. So, if I have 1 lakh shares, the number will be 00001 to 100000. Am I correct? So 1 to 1 lakh. So there will be 1 lakh numbers, right? But this does not apply to dematerialized shares because for dematerialized shares, there is no need for distinctive numbers. Yeah, it's a record of the depository. So he will credit you with 25 shares. That's all. So if the company has totally 1 lakh shares, there will be 1 lakh records in the depositories account. Out of that, 25 will belong to you. As simple as that. Okay. So when you sell 5 shares, out of your 25, 5 will be transferred. See, think about it. When you get currency notes, they have distinct numbers. But when you deposit in the bank does not keep track. When you deposit, say, 1,000 rupees in the bank, they will give a credit for 1,000 rupees and go. They will not keep track which currency note you get. The currency note numbers are a different purpose, but not for keeping track. Okay. When you deposited 1,000, they will give you credit for 1,000 rupees. Later on, if you want 500 rupees, they'll give you 500 rupees. The same currency note, they need not give you back. No need to track all that, right? That is meant for criminal acts to be prevented. So when a bank is robbed, then the currency note becomes relevant because then we will know which exact notes were taken so that if these notes come again for circulation, we'll catch the guy and ask, where did you get this note from? Like that. Only for that purpose we have that, right? So only physical share certificates will have distinctive number. Dematerialized shares, there's no need. Entry of in the records of a depository is prima facie proof of ownership because there's no physical share certificate. So prima facie means on the face of it. If you are able to show me your DP statement, in that DP statement, if I find Infosys 100 shares, that means you are the owner of 100 shares of Infosys. That's all. So entry in the records, usually depositories will give you a statement, right? And entry in the records of a depository is a prima facie statement. Okay. It's a prima facie evidence of ownership of dematerialized shares, right? Now, physical share certificates shall be in the form SH1 or as near thereto as possible. Duplicate share certificates may be issued where the original certificate has been lost, destroyed, defaced, mutilated, or torn. I already gave you that example. If at all you have the original, it has to be surrendered. Even if it is slightly torn and all, you have to give it back. But in many cases, if it is lost, how I can give it? Yeah. So I had to give a police complaint. Believe me, it's painful. That is one of the reasons why when dematerialization came, we were all very happy. In fact, I entered the market again. Pre-Harshad Mehta, I was using physical certificates. Then when I realized that the market is going crazy, I told my partner, I want to sell all the shares. He said no. He was greedy. I said, chalo, you go on. You give me my valuation. Today he gave me. I took the money. Omar Khayyam, the famous Omar Khayyam, the Persian poet, says, take the cash and waive the rest. I believe in that. Sometimes, it's better to take the cash and waive the rest. Whatever additional profit making, you make it. Later on, the Harshad Mehta scam collapsed. Everything gone. Then again, KP scam. How many, again, people went and got into that. And again, they lost. I never entered the market. That period, my money was safely with mutual funds and fixed deposits. Even mutual funds, I was very carefully investing. In fact, I did a lot of G6 in that period, which did very well. And then, in 2002, I entered. When I entered in 2002, already dematerialization was complete. But even then, there was no rule that said listed company ka shares should be 100% in dematerialized form. Even in 2002 and onwards, some donkeys were still holding their shares in physical form. Can you imagine? Which means, but one thing was clear. National Stock Exchange and Bombay Stock Exchange very clearly said, if you want to give delivery, you have to give only electronic delivery. If you want to give delivery, you have to give only electronic delivery. Physical delivery will not be taken. So in spite of that, some of the older companies, like MRF, which old companies, the people were holding it in physical form. So later on, when they want to sell it, they have to convert it into dematerialized form, and then only they can sell it. In fact, okay. So, but when I purchased itself, I purchased in digital form, and it got credited in my DP, and my life started. Okay, my portfolio started digital way. Okay, which is good. So, in case a company issues duplicate share certificates with intent to defraud, that is, the idea is to print duplicate share certificates and sell it to somebody else, whereas the original is also there, and then create problem. So if there is a fraudulent intention, then the company is liable with a fine, minimum of 5 times the face value, maximum 10 times the face value of shares, or 10 crore, whichever is higher. Okay, so maximum penalty is 10 times the face value or 10 crores, whichever is higher. They want to really punish. And in case of an officer who is in default, director or company secretary, action under 447. Do you remember? We studied it in prospectus. 447. 10 times, right? The amount, so on and so forth. So you have to be very, very careful. Nobody is doing it. Anyway, today, in listed company shares, if you issue duplicate, nothing is going to happen because physical share certificate is not possible. Today, all listed companies have to have shares should be held compulsorily in dematerialized form. If no listed company can have. Unlisted company also, we will see 9A, they have made it compulsory, but many have not done it. Practically, they have not done it, but they also should have. If the minute they want to go for public issue, if you're saying you want to go for public issue, all your physical shares have to be converted into digital records in the records of a depository. Okay. So we move on to dematerialization. Right? Let us see if any questions are there, and then we will. There is no differential rights of board of directors now. Don't confuse. You are entitled to confuse yourself, but I will not allow myself to be confused. I think by asking this question, you have not understood differential rights, voting right itself. See, voting right is there only for shareholders. That too at a general meeting. Board of directors have a voting right at a board meeting. Okay, but there it is one man, one vote. That's all. Only for shareholders, there is a possibility of show of hands and share, poll. On a poll, one share, one vote. Only then this whole thing will start. So for board of directors, there is no differential voting rights. So I would humbly suggest, when you go into questions like this, you are only confusing yourself. Subject is very clear. But anyway, for clarity, I'm telling you, understand the sound principle. This whole voting right issue will be there only for shares because one share, one vote. So only for shareholders. And in the directors meeting, if 5 directors are sitting, 1 director, 1 vote. So 3 in favor, 2 against, motion passed. 3 against, 2 for, motion defeated. That's all. Where is the question of differential voting right there? Because you are MD, you will get 5 extra vote. No, not like that. Okay. Have you understood, sir? Mr. Dada Subhash Dethe. Okay, please. Good. Prima facie means on the face of it. If you are showing the DP statement, that is a proof on the face of it. Okay, prima facie. I don't have to, on the face of it. It means. Cryptocurrency, please don't compare with demat. See, dematerialization is a facility. I had confidence in not all companies. I had confidence only in blue chip companies, top performers, their shares. So while buying the shares of these companies, holding them in digital form is easy. That is why I prefer. Whereas cryptocurrency is nonsense. Don't confuse. Again, cryptocurrency is different from digital currency. I'm in favor of digital currency, but that currency should be issued by a government. See, when a currency is issued by the government, it is called fiat currency. It is called fiat currency, which is supported by the government of a lawfully elected democratic country, lawfully elected government of a democratic country. When they issue currency, it's called fiat currency. Okay, even a dictatorship can issue, so long as it's supported by a government. Okay, that fiat currency, instead of holding it in physical form, you want to convert it to digital form, I have absolutely no problem. But please remember, there is a whole lot of possibility for fraud there. But still, this is exactly the accusation people gave when dematerialization of shares was bought. But NSE did a fantastic job. The National Stock Exchange, they convinced people. They showed how it's so easy to trade once you digitalize. Slowly the online trade. So today you're seeing so much online trading volumes only because of dematerialization. If it is physical share, it's impossible. Yeah. Boss, I can give delivery in 24 hours. I can give delivery immediately. Yeah. In online trading, delivery is given immediately. Payment is given next day. Right? So absolutely safe. Similarly, I am not against a digital currency issued by a lawfully elected government of a democratic or even a dictatorship. But the government should be strong, and that government should guarantee the currency. The Bitcoin is not guaranteed by anybody. Believe me when I say this, one of the worst things that could have, that is one fantastic scam waiting to happen. Don't believe me, okay, please buy. Okay. See, I lost confidence in the .com era and I went out of the market. I never entered the market. So many people will talk about having made money and all, but they will also say, I lost everything. Whereas I never lost any money. So this is why cryptocurrency, I'm not very good. Let's not talk about Bitcoins. Let's talk about digital currency. That's the way to go. In the next 10 years, believe me, we will not be using physical currency. We'll be using only digital currency, but not cryptocurrency. It will be government supported, protected, safe fiat digital currency. I'm sure our enlightened Prime Minister will do something about it and we will get it, but not crypto. Crypto is different, please. Okay. The so-called mining for Bitcoins, blah, blah, blah. No, please don't ask me why, when and all. Let's not even get into an argument because other students will get angry. But my view is this, as a person who has seen 3 cycles of the stock market, who has never got cheated by anybody, and as a member of the Institute of Chartered Accountants of India, I'm telling, rarely you will find a member of the Institute of Chartered Accountants of India, any of our members, rarely you will find them supporting crypto. Unless he's crazy. Even the guys who support, they will tell very, very carefully, they will tell. But 70-80% of our members will say, no, don't go there. Because we know the problem there. We know the legal tangle. We know how difficult it is to get into. Of course, the minute I give comment like this in an open forum or in a digital forum and all, immediately a few people will put a comment saying, sir, I made 50,000 in Bitcoin. Sir, I made 5 lakh in Bitcoin. I bless you. I pray to God that this money should be with you safely, but please come out of that immediately and spend that money usefully. If you're having Bitcoin and you're having 5 lakh, don't keep that profit in the books. Book it. Conservative chartered accountant, take it out. That's what I would say. Okay, quickly. I'm so happy for you. I bless you, but take the money out and enjoy rather than keep it there. Anyway, sorry, this is, as somebody rightly pointed out, this is useless, but still, see, after all, you should also know about it, right? Correct. Today also, it is like gold only, but instead of holding physical share, you are holding it in digital form. Think about it. I'm having e-gold. I'm the owner of e-gold. What is e-gold? I buy gold not in physical form, but in e-form, in digital form. So when I buy 100 grams of gold in e-form, 100 grams of gold will be credited in the commodity exchange for me in my account. So my deposit account itself will be credited. Yeah, it's not somewhere else. My DP account itself is holding, right? I can see the gold also separately, shares. So that is also there. Gold itself can be held in digital form, but then, which means physical. I can convert it into physical gold whenever I want. Okay. Yeah, ownership of dematerialized shares. Yeah, see, I'm not in materialized form. Is it talking about dematerialized? Language issues. I'm not able to understand what you're talking about. Anyway, give me some more clarity. I will try to understand. Then I will answer your question. But the point is simple. If you are holding shares in physical form, you have to convert it into digital form. So dematerialization is the conversion of securities, especially shares, from physical form, physical certificates, to electronic records. See, the beauty is mutual funds easily crossed over dematerialization. See, only the so-called useless Unit Trust of India, UTI, one of the worst organizations, they had the so-called physical units, certificates. The minute UTI collapsed, the minute they made the fiasco of themselves in the Ketan Parekh scam, and they made a debacle, and that was another UTI scam went away. This KP scam, along with that UTI scam, along with that GTB folding, all that came in one shot in that one period. Okay. So the global trust bank also collapsed. All of them thanks to the great Ketan Parekh. All of them thanks to Ketan Parekh, they all collapsed. Okay. The point I'm trying to make is once UTI went away, automatically, when the new set of mutual funds came, automatically they were in digital form. Nobody got unit certificates. The minute you purchased a mutual fund, say 100 units, straight away your account was credited that in the mutual fund, and the mutual fund gave you a statement of account. Okay, and you are happy with it, right? Only for shares, there was a lot of fighting. No, people are getting all that. But then finally, NSE ensured that 100% dematerialization, all listed companies' shares were dematerialized. Okay. What happens is the physical stock certificates, are then cancelled and destroyed. That's why I said, normally you won't get that physical certificate back. You won't get it. It will be cancelled and destroyed. And for that, there is a separate procedure laid down by SEBI, not relevant for you. And retired from circulation in exchange for electronic recording in the records of a depository. So once I surrender my physical certificate, I will have to see. I'll talk about depositories, then I'll explain to you. In India, dematerialization was introduced in the 90s. I told you, almost during Ketan Parekh scam. In fact, Ketan Parekh scam created a huge trading in the market. That could not have happened without dematerialization. With the old physical certificate, if they had tried it now, it would have collapsed, which gave KP a lot of opportunity to do scam because it was an online market, and even NSE, National Stock Exchange, was not knowing how to control the market. So the share prices started going up uncontrollably, and they couldn't control it. And one fine morning, when Ketan Parekh scam came out that he was cheating the cooperative banks and issuing bogus gold certificates, he got arrested. Next day, those shares, they were called KP10, Ketans. They were called Ketan shares. Some including Infosys was a Ketan share, including a lot of companies were Ketan shares, IT companies. All of them collapsed. The prices from 6,000, 7,000, they collapsed. And people lost money. People committed suicide post Ketan Parekh. So you should read. See, I wish, our institute, or at least in universities, there should be one subject, or at least in that security market topic, there should be a detailed history of scams and so that people should not forget it. Easily we forget the history. As time goes, we forget the past. And again, the past is repeated. Nobody wants to read the past because, hey, Buddha ka kaam ya, why you want to go there and read history? Today, my time here, okay, which is why how I know how to predict things. I predict because I am aware of the past. No prediction of the future can happen without studying the past data. Pure statistics. Unless I have, any learning machine, any so-called artificial intelligence, it's not God. From zero, you cannot reach total. Any artificial intelligence is continuously fed with data. As the data keeps on going in, the artificial intelligence creates patterns and then uses these patterns to project. That's what I do. I'm not artificial intelligence, but I have the same tools. But then you have to look at the past data. If a whole generation of people is going to say, I will not look at the past. Mr. Srikanth, don't waste my time. Past story from Ketan Parekh, Akshat Mehta, don't waste my time. Useless things. You tell me today, aaj to. Then you will be caught in that aaj to, circle. And you will never be able to understand the future. Right? You will always be living, though, many Guruji say you should live in the present. I also believe that I live in the present. But when it comes to business decisions, you should be able to predict the future. Yeah. And how can I predict the future without taking the lessons from the past? Think about it, which is why spend some time to read. See, cryptocurrency is not new. Similar things have happened in the past. Similar bogus activities have happened in the past. This is only one more in the list of foolishness. In the list of human foolishness, cryptocurrency is one more. Okay. Anyway. Share certificate, there cannot be any technical glitch. I think you mean dematerialization. See, that is why two separate entities were formed. And by then, information technology had also become very strong. And these two, NSDL and CDSL, okay, NSDL, National Securities Depository Limited. This is the symbol. This is the symbol of NSDL. National Securities Depository Limited and Central Depository Services India Limited. These two were created. They are independent bodies. They created strong databases and they protected these databases with firewalls. Complete. Nobody can get in. Strong. Thereby, your shares are held by these guys. But you can't have a direct relationship with NSDL and CDSL. You cannot go and open an account with NSDL and CDSL. NSDL and CDSL job is very simple. They are the database administrators. They have a strong, huge database in Bombay where the servers are there, where imagine how much data must be there in that, but it's 100% protected by firewall. Okay, when you're going to study information technology and information system security, you will understand more about firewalls and you will understand more about logical security. How tightly it's protected. Okay, so let me assure you, it is very tightly protected, but still, as I told you, but then very difficult, very, very difficult. Because see, nobody can access NSDL and CDSL. Your account will be with the depository participant only. And the DP only will connect with the NSDL and CDSL. And the share transfer agents have connection with NSDL and CDSL. That's all. Share transfer agents are people who are hired by the company to help the company to maintain the register of members. See, today, with so much trading in the market, every day, for some companies, it will be 1 lakh, 10 lakh, 20 lakh transactions. So who can keep track of all that? Yeah. In those days, we used to get the share transfer form in the office. Then the company secretary will make an entry in the register. Today it's not possible. It's millions and millions of zipping transactions. Finally, the depository advice is given for transfer. Then it goes to the the individual, you and I, we open an account with the depository participant. So DP. So any bank could be a DP, or a non-banking finance company could be a DP, So DP, sir, even a broking house will have a DP also. For example, my broker, Edelweiss Financial Services, Edelweiss, also has a DP division, Depository Participant. So my DP account is with Edelweiss. And so I have an account with Edelweiss only. And Edelweiss will instruct NSDL on my behalf. So each DP will be attached to one of the depositories. Anyone. It doesn't matter which. So between the two depositories, all digital shares are held. All the digital shares in India are held in the records of these two fellows, NSDL and CDSL. Okay. So when I sell my Reliance share to you, my broker, who is also having control on my DP account, will give a DP share advice to you and to your broker, who in turn will inform your DP, who may be attached to CDSL, and automatically your account in CDSL will be credited. My account in NSDL will be removed. All this will happen electronically in secured platform. Okay, got it? And then NSDL and CDSL will give on a daily basis, the share transfer agents will plug into NSDL and CDSL. So, for example, if one share transfer agent is there, okay, and I will not name anybody, or maybe Cameo Corporate Services, they are a very famous share transfer agent. They may be the share transfer agent for, say, a big company, okay, ABC Limited. Now, every day ABC Limited transfers, in the depository account will be downloaded by Cameo, and Cameo will then use that data to update the register of members of ABC Limited. All electronic, all digital, nothing, no physical handling of records. Okay. It's very, very beautiful. And I mean, if you should really practically understand it to appreciate this. Today, all listed companies are compulsorily only dematerialized shares. For a listed company, there will be no more physical shares. If a few people are still holding, there are very rare cases, they cannot sell those shares unless the shares are converted into dematerialized form. Unless it is, in fact, conversion into dematerialized form is also known as making it fungible. Unless the shares are made fungible, you cannot trade, you cannot sell. So I know one person, very aged person, he never dematerialized share. He kept quiet. He had changed the address. Then the company sent the dividend. It was not accepted. Then, you know how it is. 7 years later, they started transferring it to the Investor Education Protection Fund. Today, his entire records. Now, the Investor Education Protection Fund is holding his shares in dematerialized form. Our man has to go, open a DP account, inform IEPF, prove it, and then IEPF will transfer it in dematerialized form to his DP account. No physical. No physical. Okay. Listed companies, no physical. DP means, you can see it on the screen now, Depository Participant. Depository is NSDL only two. They have appointed agents called Depository Participants. Now these DPs only will handle the accounts of clients. So when you want to buy a share in dematerialized form, right, through a broker, it has to be credited in the accounts. It will go to a depository DP account. But immediately the DP will inform his corresponding depository. So in a way, you can say the depository participant is your agent between you and NSDL or CDSL. He acts as an intermediary. Why this is needed? Because NSDL and CDSL are huge and they cannot be bothered with these transactions. So what they have done, and that also, by arm's length distancing by themselves from transactions, what they have done is they are now creating monolithic databases, which will be changed only if information is coming from the depository participant. So individual shareholders cannot directly access NSDL, CDSL. Individual shareholders can access their DP accounts. They can sell, give delivery, buy, it will get credited automatically. So you can see your DP account, which is how many shares you are having in Reliance. But the underlying data will be with NSDL and CDSL. And that will be updated only based on the information received from the depository participants. That is why the DPs are very important in this framework, because they are the client-facing end of dematerialization, whereas the data is residing in NSDL and CDSL. This is a good model. It works well because instead of directly having that, but over a period of time, as electronic holding of shares becomes very popular, maybe the DP's role may become meaningless. But as of now, they still perform a very important thing. And NSDL and CDSL may directly allow you to go have access to your account with them. You might have a direct account there, but as of today, you cannot. You have to have an account with the DP. Your shares will be held in that account only, and any changes will be informed by the DP to NSDL and CDSL. In turn, NSDL and CDSL will inform the company so that the register of members will be updated. This is the framework for all listed companies. This is how it is. No physical shares. Mr. Manmohan Kumar has put 2 question marks. His original question was, what happened if any technical glitches will come? I think I have explained to you why it cannot come. But if you still have a doubt, maybe you ask a doubt again, I will answer. Brokers will not have your share. No. DP only. It will be held in the DP account. Exactly. It is very safe. See, but what happens, for a short while, for your information, I'll tell you. Actually, your broker has control over your DP account if you have given him a power of attorney. Right. For example, I have given a POA to my broker because I am happy with him and give it. But you may not give. If you are doing electronic trading, you can control your own DP, but you have to give delivery. And the minute you go for an online trading, they will get you a power of attorney automatically. Because the minute you sell, automatically entry has to go from your DP account to NSDL to say that you have sold. And from there, it will go to the other broker, and that broker has to inform to his client that it has come. That is, his account will be credited. The DP account will be credited. So this will be there. Therefore, brokers. But what happens is sometimes brokers themselves have an account with NSDL and CDSL. Because brokers are both jobbers and brokers. They buy and sell for their customers. They also trade in their own name. So in their own name, they have an account. That account is called pool account. There's a pool account, pooling, all pool. So sometimes what some brokers do is, because the customer is regularly trading in that share, buying and selling, they will not transfer it from the pool account to the customer's individual account. They'll keep it there. There also you will be clearly marked as so-and-so share, but they won't transfer it to the depository. Why? Because for every time you transfer to the depository, there's a charge, 5 rupees, 10 rupees. So to avoid that, they'll keep it in the pool account because, see, suppose I'm buying Reliance today, I'm definitely going to sell it 3 days, 10 days later, and I tell him, boss, I'm going to sell it, he'll keep it in the pool account so that no charges, no DP charges. But suppose I tell him, boss, it's an investment, transfer it, immediately he'll transfer it to my DP account and it will be held there. Okay, so that's possibilities there. This is all too technical and unnecessary for you, but then practical. Okay, beautiful. So, with the age of virtual and online transactions and the introduction of the Depository Act, securities no longer need to be in physical form. I justified all that. But some shareholders still want to hold physical securities and gloat over them. Look at them. One wonders why. Huh? See, suppose you have a lot of cash, keeping it in the locker and looking at it is very wrong. As a chartered accountant, future chartered accountant, you should know. Cash kept in the locker is actually wrong because it should be put in the bank. At least minimum interest will be earned. Money should be put into productive use, right? Should not be physically holding it and looking at cash. No use. Okay. Please note, SEBI has directed listed companies not to accept transfer requests for shares held in physical form after 1/4/2019. So these shares are to be compulsorily dematerialized. That is rule 9. What I will do is, now the time is 8:45. I will give you a small break. Say 5 minutes, means 8:50. We have to come back for just a biology break. Go to the wash, maybe grab a cup of chai and come. That's it. 5 minutes, exactly 8:50, I will start again, right? Sir, a small break. Welcome back from the very short break. Idea was to just give you an opportunity to relieve yourself and maybe grab a cup of chai and come back. Okay. Let's see if any queries are there before I move on to Rule 9. No, there's no major queries are there. Right. Now, Rule 9 of the rules, this is Rule 9 of the prospectus and allotment of securities rules, just for your information. Because this deals with public issue. So the promoters of every public company making a public offer of any convertible securities may hold such securities only in dematerialized form. Okay. See, what is a convertible security? Simple. A convertible preference share means at the time of issue, it is a preference share, but there is an option to convert it into an equity share. Such cases, it is called convertible shares. So preference shares are convertible into equity shares. Similarly, debentures. At the time of issuing, it is a debenture, but there is an option to convert it into an equity share. That's called convertible debenture. So the conversion could be fully convertible. That means the entire debenture will be converted into equity share. It's called fully convertible debenture or fully convertible preference shares, FCPS or FCD, or partly convertible. Means it's a 100 rupee debenture, 80 rupees will be converted, 20 rupees will be repaid, redeemed. Same way, preference shares could also be partly convertible. A portion of it will be converted, portion will be redeemed, right? Finally, of course, you have NCDs, which is non-convertible debentures. That loan, pure loan, it will be repaid, no conversion. Non-convertible preference shares are there, but why not? Which will be redeemed. So this is the convertible. So if you are the promoter of a public company making a public offer, if convertible debentures are there or convertible preference shares are there, that has to be held only in dematerialized form. The entire holding of convertible securities of the company held by the promoters in physical. See, because the original equity shares will be dematerialized. The public issue, the minute the shares are allotted, immediately the depository account will be credited. Because at the time of application, they will ask you for your DP account number. So the minute you give your DP account, the day it's allotted, it will be informed. The registrar will inform NSDL and CDSL. Immediately, all the DPs will be informed, reverse. And the DP accounts will be credited. In the morning, you wake up, you'll see entries there in your account. 10 shares of Wipro would be there. Okay, like that. Or LIC shares will be there in that account. Like magic, it will be credited. So when you go online and check your DP account, you will find, I got my LIC shares. Like that. Okay. So it's as simple as that. Now, but whereas, the equity shares will be converted, the convertible securities may be held in physical form. No, the convertible securities also should be in equity, in digital form. The entire holding of convertible securities held by the promoters in physical form up to the date of the IPO shall be converted into dematerialized form before such offer is made. And thereafter, such promoter shareholding shall be held in dematerialized form only, right? Just to ensure that when they get converted, that will also be dematerialized. That's it. Okay. Now, 9A is there where they say every unlisted public company. So for private companies, shares are still in physical form. For listed public company, 100%, or rather listed company, 100% dematerialized form. Unlisted public company, as per Rule 9A, shall issue the securities only in dematerialized form and facilitate dematerialization of all its existing securities in accordance with the provisions of Depositories Act and regulation. But between you and me, I have not seen many unlisted public companies do this. The reason is when you dematerialize shares now, the company has to pay a fee to the depositories, which is little, shall we say, costly. So all companies may not be able to afford. So they are not doing it. Though it's there, Rule 9A is there, they're not doing it in practice. Many companies. Every unlisted public company making any offer for issue of any securities or buyback of securities or issue of bonus shares, etc., shall ensure before making such offer that the entire holding of securities of its promoters, directors, key managerial personnel has been dematerialized. So, unlisted public company also should get its shares dematerialized. But private company, you can continue to have physical shares. Okay, this is the point. Good. So, I don't see any questions coming, but let us see if there are any more. No. Okay. One second. I went out, I signed out, I'm again signing in into the query pad. Okay, just give me 1 minute. Maybe there's something left out, I'm just seeing. Yeah. Can a stockbroker be a DP? Most of the stockbrokers are DPs. All the stockbrokers have a DP. So what they will do is when they want you to become a customer, they will say, sir, you can open DP with us, DP account with us. So that's one USP for them. So all of them have DPs, but the customer need not have the same DP account. If you can have a broker, it is not compulsory that you should have DP account with him. You can have DP account somewhere else also, and he should jolly well accept. He cannot tell you, if you want me to be the broker, you are my DP account only. No. Okay. Though they will try to sell it. Similarly, banks are all having DP. State Bank of India, DP. So when you go as a customer to the bank, the manager will have a target. He will tell you, sir, please have a DP account. NBFCs, non-banking finance companies, they have DP activity. Because see, it's a good activity. In volume, you can make some money out of it. And you will also share some fees, which is paid to the depository. Some portion will come to you. And you can get, and you will charge, these companies will charge every year, they'll have an annual charge for DP account. Sometimes, if they want you to become a customer for the broking division, where they will make more money from you from commission, they will give the DP account free. Sometimes they'll say no charges for the DP account. We will waive the annual DP charges, DP account charges for 2 years. They'll give. The idea is to pull you in and start making you trade so that there he will make money with your commission. So like that, it's like that. Okay. Does convertible securities include only prevention advances? To my knowledge, sir, my limited knowledge, I'm not able to imagine any other type of security which can be converted into equity shares. Got it? Deposits cannot be converted into equity shares, and deposits are not securities. So I'm unable to think. Maybe, again, with my limited knowledge of company law, I'm able to only think of these two. If anybody can enlighten me, I'm ready to learn. As prescribed SEBI, the security should be demat. Then how promoters could hold shares? See, originally, when the shares are allotted, it would have been in physical form. Before this rule, see, before 2019, even listed company shares were held in physical form. At the time of original issue, they would have been issued. Now, friend, there is a life before all that. Don't think the world started when we were born. Before our birth also, world was there. And at that time, for example, there are companies which were formed 200 years ago. British companies still listed in in your Bombay Stock Exchange. So they'll be having physical shares now. So dematerialization came only in the 90s. Compulsory dematerialization in 2019. Till then, even listed company shares were held in physical form. Okay. So how promoters could hold shares? Could hold shares of other securities in physical form. Why Rule 9 is only for unlisted companies? Does it mean listed companies are allowed for? No, sir. Listed company already coming under the control of SEBI. Kanna, you are not listening. You are so eager to ask a question, you are not listening. See, all listed companies will come under the purview of SEBI. And SEBI has already directly listed companies to compulsorily dematerialize all the shares. You got it? Please confirm that you have understood. Yes, Mr. Vyas. Okay. See how you are beautiful. But you guys all should become chartered accountant and then go to tribunal. Yeah. The way you are all arguing, you are taking one point and then using it to counter another point. Huh? Wow. You should all go to tribunal and argue. You are all lawyers. You are not chartered accountants. You are lawyer material. So why rule 9 is only for, see, rule 9 is for listed, unlisted because they are wanting unlisted company also to give it. But for listed company, already SEBI is there. SEBI has told them very clearly. So rule 9 is for unlisted companies. From that, you cannot conclude listed companies are allowed physical form. Oh, see, what you are doing, yes, in those days, there's something called logic. Greek logic is there. Syllogistic logic. Yours is your conclusion doesn't follow from the premise. Your conclusion doesn't follow from the premise. Rule 9 deals with unlisted companies, says you have to get it dematerialized. From there, you cannot argue all listed companies are, because listed companies come under a different rule, under SEBI guideline. And SEBI has given a clear circular 1/4/2019, compulsory dematerialization. Got it? But I loved the way you argued. You see, typical lawyer argument, but not logical. Okay. Logic is a very important subject. I don't know if you're aware. I did my CA along with my BCom. When I finished my +2, in those days it was +2. I think it's still +2. So I did my 12th standard. Then after I finished my 12th standard, I decided to become a chartered accountant. When I was in 10th standard, I joined Commerce Group. Then when I finished my +2, I enrolled for the entrance examination. In those days, it was called entrance. And so I joined Vivekananda College. And as I was studying for BCom, I wrote my entrance. And I cleared the entrance exam. Then I joined articleship in the daytime. In those days, evening college was evening college. We used to go at 5:30. The college will begin at 5 o'clock and 5:30 and go until 8:30. It was Pakka evening college. I studied in evening college of BCom, Vivekananda. And in the daytime, from 9:30 to 4:30, I used to do articles. That exact number of time, I used to start early and then ensure that the timing was covered. So I used to go by cycle to office. And from my office, wherever I'm auditing, I will take the cycle and go to Mylapore for my college. So I did my intermediate along with my BCom. In 1986, I qualified as a BCom. I also wrote my intermediate exam. I cleared, of course, All India 30th rank. I cleared both the groups in one attempt, along with BCom exam. It was literally along. I wrote 4 exams of BCom, then 7 exams of intermediate. 11 papers. In May 1986, I wrote continuously. What? Every day was an exam. They don't give that gap. In those days, there was no gap. Today, you're having gap now, one day and all. Never. Though, even if it's a Diwali day, we have to go and write the exam, Baba. Christmas, we have to write the exam. Christmas may not, November. But if it's a holiday also, you have to go and write. Diwali day, you have to write. Sunday, you have to write. Continuous 7 days ka exam. No gap, nothing. Okay. So that was how it was. So I wrote and I cleared. To answer question raised by Mr. K. Then 1986. Then I had completed my intermediate 2 years of articles. So 1 year I did my industrial training with United India Insurance. 1 year. Then in 1987, I wrote my final exam in May and I cleared. All India rank 27. So both the groups I wrote, I cleared. Just to give my history background, I'm telling you. So point is, okay, this whole, approach, okay. Mukta Vyas is a girl, is it? I'm so sorry. See, these North Indian names are very difficult to understand. Right. So, is it not compulsory to have a broker? It is. See, if you want to buy and sell shares today, you can do it only through a broker. If you want to buy and share, you need a broker. Otherwise, you can't buy and sell in the share market. Directly, you cannot go and buy. But off market, you can do. Suppose you want to sell your shares to me, I can buy, no need for broker. But if you want to buy and sell in the share market, definitely you have to go through a broker. Even if it is electronic trading, remember, you will be a customer for a broker who will give you access to his account. You are using his account, you are piggybacking and buying and selling on his account. So in a way, he will get the commission. When you buy and sell, in a way, you are paying him commission, but except that instead of calling the broker, you will be able to directly buy and sell. But it will be done only through a broker. You will enter his, you will access your broker's web page, then you will put your user ID password, your trading facility will start, you will start buying and selling, blah, blah, blah. It will be linked to your DP account also, so automatically credit will go. Then finally, you will close and come out. Your broker also will know what you're doing and he will get commission on it. Today in electronic, but still you need a broker to go for to the market. Okay, thank you. I'm sorry about the mistake in the. According to Rule 9, non-convertible securities can be held in physical form. No, even if it is non-convertible security, ma'am. What is a non-convertible security? Equity share. If you are going for a public issue, then that also has to be converted into dematerialized form. Please wrap your minds around this concept. If you want your shares to be listed on a stock exchange, they should be in dematerialized form. And yeah, if it is non-convertible preference share or non-convertible debenture, you can hold it in physical form, sir. Enjoy. Keep it in physical form. Okay. How you studied with art? Because I wanted to become a chartered accountant. Yeah. Once you have that passion driving you, my dear friends, you will do everything. Okay. If that passion is driving you. But if you know you are having negative energy, keeping on asking negative questions, keeping on irritating people, nothing can happen. But once you have a positive energy, you will go find the teachers, you will go at their timings, and etc., etc. So it all happen. But if your energy is not positive, if your only job is to find fault with other people, criticize people, keep on negative, very rarely you'll be. But if you're having positive energy, even small things you won't ignore, you will ignore it, you'll go on with life, and you will only concentrate on your goal and not on wasting time with, if you, then all that free time you're getting, which you're not wasting, that time you'll use it for studying, understanding the subject correctly, preparing yourself, writing the exam, clearing it. And whereas most students are wasting their time, thinking what to do, this to do, that to do. Clarity, just check, you have to go. Then it's easy. This is my humble view. Maybe some of you may get angry with me for telling this, but that is how it is. Okay, that is the secret of my success, whether you like it. Then I went on to get All India rank in ACS also. When I did my company secretary, again, All India 4th rank, All India 10th rank in ACS final. Okay, All India 10th rank. I'm giving this again and again, not to irritate some of you or waste your time or to give useless information, but to tell you that it is possible. It is possible. But it needs a different attitude and mindset. Negative mindset, irritating people, insulting teachers. No. But the minute you worship your teacher, not only me, every teacher, I worshipped every one of my teachers. Even those who have criticized me, who have insulted me, I have respected them. Why? Because I'm a teacher. So once you do that, automatically you will grow. Today is actually Thursday, Guruvar. On this Thursday, remember, Guru is important. You may not like him. Maybe you don't like me. As a person, Srikant, I hate. He's an arrogant fellow thinking he's a big rank holder, blah, blah. But teacher is a teacher. Okay? Respecting the teacher is it's a culture, especially in Indian culture. Please do not, do that. That is not a good thing. Good. Voting rights of shareholders, separate section 47, voting rights of shareholders. On a poll, voting right of a shareholder, whether equity or preference, is in proportion to the value of the paid up capital held by him. Right. On a poll. What is a poll? Later on, when we come to management and administration, we will talk in detail. Right now, when the meeting of a company is starting, shareholders are there. They have to vote. Initially, voting is raising hands. Only shareholders who are attending in person can raise the hand. They will raise the hand. So one man, one vote. But that is stupid because Mr. A may be holding 60% of the shares, while the remaining 10 donkeys are holding not even 10%. Now, are they equal? So 10 fellows will raise the hand, Mr. A will raise 6. So the minute that happens, A will tell the chairman, Mr. Chairman, I want a poll. That's all. The minute A demands a poll, which A can demand, we will see that when we come to poll, who can demand a poll, you will understand. He is very much entitled to demand a poll. The minute he demands the poll, then the chairman will say voting by poll. Then piece of ballot paper will be given on which the resolution, then for, against. So when there, Mr. A will tick against. That means it's not one vote. It is, say, 60,000 shares then 60,000 votes in favor, whereas those donkeys together holding only 10,000 shares. Right? Sorry. So have I passed a special resolution? Yes, I have. 10 into 3, 30,000. Yeah, I got 60,000 votes against. So it's an against vote this guy is giving. The motion is defeated. The motion is defeated. If Mr. A wants to pass a resolution, 64% is there now. He will vote, he will win. This is corporate democracy. It works on proportion in total value and not the one man, one vote in conventional democracy. Sorry, sir. This sounds, how is it possible, sir? One man, one vote, equality, communism, socialism. Sorry. Because I have invested more money, my risk is greater. So I should get a better stake, say, in the affairs. So higher the stake, greater the risk. Therefore, greater should be the voting rights. Right? I mean, that's the man talking to you is a free market capitalist, anti-communist. I used to be a communist once upon a time, and I understood that it won't work. It won't work. People who contribute have to take reward. If you cannot contribute, don't expect reward by right. This is my view. Don't expect reward by right. But if you contribute, take. You are entitled. Okay? The contribution should be there. In addition, of course, other than that, welfare and all, I'm okay for you. Education, medical, okay. But simply communism, 5 people will work, generate money, then everybody will share. Is it not possible? The 5 people who generate wealth will definitely have more. The others will have less. This is the reality of human evolution. Okay, so we can't do anything. So, and that is reflected in company form of organization. Your number of votes, it depends on the number of shares. So voting right is based on proportion in the value of paid up capital. Which is why when we come to differential voting rights, what happens? When normally 1 share, 1 vote on a poll, for DVR alone, what we say, for 2 shares, 1 vote. For that, I'll give you extra dividend. Even then, it is proportion to the value of paid up capital. So those who hold more value of paid up capital will be able to influence the company's decision. Okay? So this is how corporate democracy works. Right? So every equity shareholder has a right to vote on every resolution. Preference shareholders have a right to vote only on resolutions which directly affect their rights. Resolution for winding up, whether to close the company or not, he has the right to vote. Any resolution for repayment or reduction of equity preference share capital. See, later on we will be seeing reduction of capital in this topic. So when you are reducing his liability, preference shareholder will also have a right, because when you reduce his liability, there's an impact on the preference shareholder, right? Therefore, if there is any repayment, means you are buying back the shares, or reduction, preference capital also has a right. But more than that, when will the preference shareholders get the right to vote on all resolutions, whether they directly affect their rights or not? Other than these 3 categories, all resolutions, including the above 3, when will they get the right to vote? Where the dividend on such class of preference shares remains unpaid for 2 years or more. So for 2 years, you have not paid him his dividend, which is entitled. You didn't have money profits, okay, whatever, you didn't pay him. Then thereafter, the preference shareholders get the right to vote on all resolutions. Okay, something you might want to remember. Section 47 does not apply to a private company, provided there is no default by said company in filing financial statements and annual returns. See, this is something you will keep on finding in the Act. Any exception or any benefit given to any type of company, government company, Section 8 company, private company, can be enjoyed only if that entity has correctly filed financial statement and annual returns. If these two are, there's a default in filing financial statement and annual return, then they cannot enjoy the privilege given to them. Okay. So point is, the rule that we saw here is not applicable to a private company, which is, there is no default in filing financial statement and annual return. So private companies can be somewhat innovative in structuring voting rights of their shareholders. They can be a little more innovative. They can have different type of voting. Okay. We come to another important topic, variation of shareholders' rights. Okay, variation of shareholders' rights. means at the time of issue of the shares, you have issued shares with certain voting rights. Now you want to vary. You want to change. The power is given to you in section 48. Before that, let me see any queries are there. Preference shareholder do not have voting power. When did I say preference shareholder does not have a voting power? Preference shareholder has voting power in certain special cases. And they can vote on all resolutions if the preference dividend is remaining unpaid for 2 years or more. So I did not say preference shareholder do not have voting power. I said they have voting power, but subject to certain conditions. Okay. So whether equity or preference, I don't see where it is there. I don't know. Okay. If proportional capital is ultimate decider, then why do we have different voting rights or not? Correct. See, at the time of issue of the share, the man agrees. See, normal rule is 1 share, 1 vote. Now, as part of the issue, you are telling, I will give you 1 share, but that 1 share will carry only lesser right. Are you okay? Knowingly, if he accepts it, then he is willing to take it. That is what it means. Okay, got it, Ms. Pooja? So, differential voting rights are allowed, provided you convince that guy. Okay, chalo. You give me 5% extra dividend, I will take half share, half vote. So that is a contractual choice that he is exercising. Then to that extent, it will be restricted. That's all. But normally, corporate democracy, in fact, differential voting rights, I told you now, only 2 companies have issued. Otherwise, by and large, all companies have only normal equity shares on which 1 share, 1 vote. So if you are holding more number of shares, you will have more say. This is a standard vote. 99% it will be like that only. Suppose the differential voting rights, then proportionately you will get less. So where I am getting for 1 share, 1 vote, you will get for 2 shares, 1 vote. But here again, it will be based on how much investment you have. Okay, is the point. We do have different voting rights as normal and different. It's a choice, ma. See, this differential voting right share is not compulsory. If you want to have. See, you know when we will have it now. Suppose the promoters of the company don't want to give control, but at the same time, they want money for expansion. So then they will go to the public and say, or go to the shareholders and say, look here, I need money. I need 5 crores. I'm issuing differential voting right shares. So for each share, you'll get only 1 vote, or one for 3 votes or 5 votes, you'll get 1 vote. 5 crore, 5 votes, you'll get 1 vote. 5 lakh, 50 lakh shares of 10 rupees each, but 5 shares, 1 vote. This is the balance sheet. This is the P&L. This is how we are making profit. Every year we are declaring 50% dividend on the equity share. We will give you also 50, but we will give you 25% more. For normal shareholder, you get 50, you will get 75%. But only 1 vote for 5 shares. Are you okay? So he reads the prospectus, he is satisfied, he agrees, he applies. That's it. Then when he comes to the meeting, he will get only 1 vote for every 5. It's accepted. Okay, nothing wrong. That is not violating the corporate democracy. That is part of corporate. Again, it shows more financial power, more. But here he is giving more money, but accepting lesser voting right contractually. Okay, that is what it means. That is why there is so much control on issue of shares with differential voting rights. So many conditions are to be satisfied. You can't just like that issue DVR. Okay. No, sir. Voting right is not linked with shares held and risk. Risk is there. If you hold 1 share in a company, you have a risk. If you hold 5 shares, you have a risk. But 1 share ka risk is less than 5 shares ka risk. Na? That is what we mean. Okay. So those who hold 5 shares should get 5 votes. Those who have 1 share will get only 1 vote. That is what it means. Okay. Since man holding more share is having more risk, he is getting more vote. That's all. No, DVR cannot be listed at higher price. Same price only it will be listed. It cannot be listed at higher price. No. On the other hand, it could be listed at it could be traded at a lower price. Why? Because it does not have voting rate. But so long as, see, basically valuation of share you see later, it is based on either a dividend discounting model or future cash flow discounting model. Either way, that DVR also will get the same valuation. Same. He can't get more or less. Maybe a little more if the dividend is compulsorily given, he can get little more, but at the time of listing, no. Okay. I have not seen this happen at the time of listing. But again, you see, if you want to do it, you can justify it, you can do it. You can go to SEBI and they can allow you to do it. See, Reliance, till Reliance, partly paid shares are not allowed to be traded on the stock exchange. In order for a share to be listed on a stock exchange, it should be fully paid. Then Reliance comes there and says to SEBI, tells SEBI in 2020, I'm going to issue partly paid shares. I want those partly paid shares to be traded on the stock exchange. SEBI looks at the whole thing and says, Chalo, your Reliance, widely traded, go on. Partly paid also, no trading. Partly paid share of Reliance is now listed on stock exchange, NSE and BSE, traded. So any rule, SEBI is willing to always relook at it. Suppose you are able to show that your DVR is having slightly higher valuation, and it could be only slightly higher. It can't be totally half off. So slightly higher. If you are able to show the valuation and justify, not have it as a separate series and differential voting right shares at a higher valuation. I don't see anything wrong in that, but I have not seen it happen. I have not seen it happen. But yes, sir, theoretically possible, sir. Theoretically, because if he's getting a higher dividend, if I'm using a dividend discounting model for him, then maybe slightly, but seriously using, I'm not able to calculate such a huge increase only because he's getting higher dividend. Other than that, there's no benefit for him. So I'm not able to see how it will influence the valuation. Anyway, don't worry. You are an intermediate student. When you come to final, we will teach you valuation, or maybe you will learn it in this financial. Then you will understand why I'm saying. See, many topics, if you see as a standalone independent topic, you can ask all sorts of questions. But once you see the total picture from other topics also, other subjects also, then you will be, your clarity will be. Which is why, don't restrict yourself to one subject and say, hey, this subject is, I will study another. There are a lot of connections between subjects. As a professional, you should be able to make these connections. Okay. When you're able to make these connections, definitely the way you prepare will be different. The way you write the exam will be different. Okay. And it can be seen by the examiner correcting, hey, this guy is not a mug up and vomit guy. He really, or she really knows what they are talking about, and they are a fit person to become a member of the institute. Because our exam is not a competitive exam. Yeah? It is a qualifying exam. Got it? It is not a competitive exam. It is a qualifying exam. The minimum qualifying limit, if you reach, you are a member. If not, you are not a member. As simple as that. So, qualifying exam. You have to prove to the institute that you are capable of becoming a member. And that can be done only by showing your knowledge in a meaningful way, not by mug up and vomit. Which is why the questions are also not meant to test your theory, make up and knowledge, but to test your logic, analytical skills, applying the knowledge to a practical situation, and not just simply giving a yes or no answer, but a well-argued good answer. Okay, which is why language skills become a little important for you. So if my humble request to you, without getting offended, without getting angry with me, just listen to what I'm saying. Improve your English, please, grammatically. Try to make it a little more grammatical. Please, any effort put into improving your English will not go to waste, either in the exam preparation or later on in your profession also. Think about it. Between a chartered accountant who can talk English fluently and a person who may not be able to, even though knowledge may be there. See, I know many people whose fluency in English is not good, they possess extraordinarily depth knowledge of the subject. But sometimes, because of the lack of fluency, their knowledge is not recognized by the society. Therefore, fluency in English is, please concentrate. Don't get angry with me. Don't start immediately abusing me. Don't start putting comment like, don't waste my time telling useless things and all. As guru to student, take it on Thursday. Yeah. Okay. English is important. Please learn it and try to be a little more grammatical than where you are. And some of the queries, I'm automatically correcting the English as I'm reading it. Don't do that. So nothing wrong in learning in English. Okay. It's a good language and it's a global language and it is very useful language. Please. Just like, in some states in the country, they consciously ignored Hindi and said Hindi, no. Like that, you don't say English, no. Don't be mad that I will speak only in Hindi, never in English. No, learn English. Make yourself more fluent in English. Grammar, okay? Not, you can write any nonsense without grammar and say I'm fluent. No, grammatically. Please, it has a big impact on theory papers. I've noticed that people who are good in accountancy, maths, etc., fail CA exam, not because they're not good in accounting. Accounting, they'll get very good marks. The theory subject, they'll get caught in the theory subjects. My humble request to you. Okay. Whereas a guy like me who's weak in maths, not good in accountancy, can still study and make up. And I can easily cover it in my language skills. While writing the answer, I'll cover it up. Need presentation, I'll cover it up. But this way, it's very difficult. My humble request to you. This is the comment given now was meant in good spirit. If anybody in the audience is getting angry with me, maaf kar dijiye. My intention was to help you, not to waste your time. Okay. Yeah, I will definitely tell you, Prabhas, not now. When I get a practical question now, I will show you how that question should be answered in a neat way. So that the exam will give you, for 5 marks, you'll get 4.5. That's it. In CA exam, you won't get 5 on 5. Centum, I mean, maybe 1 or 2 people will get, but rare. Okay. I have not heard of centum. 90s, yes. A lot of students have got 90 plus in income tax, accountancy and all, 90 plus. Recently, I've heard of students who have got 90 plus. Okay. That you can do in accountancy, costing. Costing, in fact, my marks in costing was 78, which was supposed to be good. But I'm sure there are people who have got 90 and all. Okay. We've seen all this. Moving on. We are seeing variation of rights of shareholders. Okay. My goal was to complete up to some more sections, but that's okay. We will not hurry up. Can a DVR can be issued as more voting right and lower dividend? No. 1 share, 1 vote. You cannot have 1 share, 2 votes. No. No. By reducing dividend, you can't do that. You know, lower. Not up. Actually, I don't know. I'll check up and get back to you. It's a good point. This is a very interesting question raised by Himanshu Gupta. Can DVR be issued as more voting right? Means, in other words, 1 share, 1.5 votes, 2 votes. But dividend, whatever normally declared to everybody, he'll get 5% less. Not practically not worth, because nobody will want it. With that voting right, what I will do? I can't eat. With that extra 5%, I can eat 1 more chapati. So logically, practically not relevant, but theoretically, yes. Is it possible or not? Give me some time. I will research and get back to you. Good question. Good question. I will get back to you on this. Yeah, good. So time now is 9:28. Variation, let's see how many topics are there. Yeah, let's finish variation and move on. See, variation of shareholders' rights is possible where share capital of the company is divided into different classes. This can be done with the consent in writing of not less than 3/4 of the members of that class. Means I'm already having equity shares carrying full voting right. Now I'm telling them, boss, I will give you half vote. Okay. They may take it like that. But for that, you need the consent in writing, not voting at the meeting. You have to write a letter to all of them and 3/4 of the members of that class. See here what happens. Suppose there are 100 members, 75 should agree, not less than 3/4. So 75 and above should agree. Okay. Number. Or by means of a special resolution passed at a separate meeting of the holders of the issued shares of that class. Okay. Now, again, though section 48 is there, I have not known one example of a company which has varied the shareholders' rights. Facility is there, that's all. So variation of shareholders' rights requires a provision to that effect in the MOA or AOA. There should be, in the articles at least, there should be a provision. In the absence of such a provision, the variation should not be prohibited by the terms of issue. So there is no provision in the articles of memorandum. But at the time of issue, they said, there will be no variation in the rights, sorry, then you cannot. If there is nothing, there should be nothing, then you can vary. But if you said no variation, then it's prohibited. You can't. If the proposed variation would affect the rights of another class of shares, written consent of 3/4 of such other class of shareholders shall also be obtained. Right? Provision for dissenting shareholders of a class. So you are proposing that variation will be there. Other shareholders are agreeing, but I am holding only 10% or more. I don't want it. Then I am dissenting. I'm not agreeing. Dissenting means not agreeing. Holders of not less than 10% of the issued shares of a class who did not consent to such variation or did not vote in favor of the special resolution may apply to the tribunal within 21 days to have the variation cancelled. So tribunal is the judicial body. Once the application goes there, tribunal will call a hearing. And then after satisfying yourself that it is unfair, they will remove it. The application may be filed by any member of the class so authorized. Variation shall not take effect unless and until confirmed by the tribunal. So, order of tribunal in application to be binding on the shareholders. Once the order is received from the tribunal, the copy of the order should be filed with the registrar. Okay, not a very important section. It is there, rarely used. So, we have completed 30 slides, which is not bad. My target is about 35 slides per class. Okay, is the target. So I don't see any more questions. Let me check if any questions are there. Then I will answer it and I will go on. Chalo. So this is good enough. We will stop here. Thank you very much for a wonderful participation as usual. Looking forward to interacting with you on Saturday morning, 7 a.m. to 9:30 a.m. Bye. Sir, class over, sir.